Hello, everybody. Welcome back to another market open. This one comment has me dying right now. Mario G says, you buy a regular drink with no ice and get a second cup filled with ice. This way you enjoy more. I love it. That's awesome. I just got a small lemonade, but now I just put some water in it because I drank the lemonade. So that's why I'm here. Mario says, what time will he go live? Make your bets. I am here, 9:20, baby. Hello, everybody. Kaladan, AT, Ty Gordy, Rock Forest, John Guy, Dan Harkness, Midwest, Mario, Sonam. Good morning. Good morning. Thank you for being here. Broccoli, Bob, Damien, Pete, George, Mr. Emilio Son, Pete, John Stevens, Seth Roth, Jared. Thank you all for being here. Captain Chuck. All right, folks. So it looks like we're getting the dip that we said we were going to get. Well, it looks like it is here. Currently, markets are down, and markets are down pretty aggressively. If I would have to kind of bring an adjective to it. And the reason I think markets are down so aggressively is honestly because of this debt ceiling negotiation. Speaker of the House, Kevin McCarthy, for those who are international, this is the Speaker of the Republican-controlled House of Representatives. There are two chambers of Congress, the Senate and the House of Representatives. Both of them have to come together to create they make up Congress, and they have to come together to be able to make policy decisions that America, and then as a result, the entire world will have to live with. They cannot come to an agreement on the debt ceiling. And as a result of not being able to come to an agreement on the debt ceiling, we have not been able to increase our debt yet. And if we can't increase our debt, I think that creates a lot of instability overall within the markets. And that's kind of what we're seeing right now. And that's, I think, why we're seeing a lot of the decline. We had Sofi, Anthony Noto, go on CNBC yesterday. We're going to talk about that. We're going to talk about a bunch of different things that are going on to be able to discuss it. Igor, what's up? Adam going on doing my fat father walk and listening to it. I appreciate you, man. Now, I want to play a very small clip here of Mohamed El-Erian talking about the debt ceiling, because this is the reason the market is down today. Maybe you could talk about it's a generic pullback. And, for those that were asking palantir 11 or 10, let's see if we get there today. But outside of just a regular pullback, the reason the market's down so aggressively is because we don't have a deal. And until we get a deal, there's not going to be enough stability for a lot of people to feel that it's time to invest. So let's take a look at this.
Be close to 4,200, Mohammed. It feels like the stakes are even higher for there to be a deal on the debt ceiling and for there to be a deal before this X date, just because of the valuations that we're at right now.
I totally agree. First, the only people who benefit from this debt ceiling saga are the adversaries of the United States. We are sending a very...
So he said the adversaries of the United States are the only people that benefit. The United States does not benefit.
Very negative signal about our ability to run our economy, let alone be a anchor for the rest of the world. And the market so far has actually dealt with it very well. There's three big uncertainties: the debt saga, whether the Fed is going to hike, pause, or skip at its next meeting, and of course, what's happening to credit. So I look at this market, and actually I'm very impressed by how stable it has been over the last month.
It's interesting that you mentioned, the beneficiaries or adversaries, and I sort of heard the same commentary from Lori Calvasina of RBC yesterday, who said that U.S. investors are pretty sanguine when it comes to the debt ceiling, the belief that there will be a deal in place, but international investors are much more worried. Is this going to be a permanent harm in terms of the perception of the U.S. markets, or is this just going to be, it happened in 2011, it happened in 2017, and this is just another time?
If it was happening on its own, I would say it would be very transitory, to use that awful word. But it's not happening on its own. There's other things happening. People still remember that the global financial crisis originated in the US. People still remember that the trade tariffs that went against international law originated in the US in 2017. People still remember that we had a banking tremor not a few weeks ago. So it's starting to add up. And this is important because already certain countries are embarked on building little pipes around the dollar as the reserve currency, China being the lead example of that. So we've got to be careful. We must not give the rest of the world one excuse after the other to try to de-risk from the US.
So as you can see, Mohamed El-Erian believes that what's going on right now is a travesty for the United States in terms of how we can't run our economy. And international investors might be at least part of the catalyst for why we're seeing this pullback right now, because they don't trust the United States. We were part of the reason, or one of the big reasons, that the subprime mortgage lending crisis happened in 2008. We just had a bunch of banks fail. And so there's not a lot of trust in the United States or like legitimacy within our government right now that we're going to be able to kind of get this done, even though I do think, we're not going to default on our debt. I don't even know what defaulting on our debt looks like. Like the 31 trillion we owe, does that just go away magically and then we don't owe anything anymore and we start from fresh? And like, what political ramifications does that have? Geopolitical, how does that make us look to the rest of the world? I don't know. And I think it's going to, I got to go deeper on that. But what I do know is that doesn't look good for the overall hegemony, which is just the geopolitical term for like power that the United States has. And at this moment, during everything going on with Russia, China, Taiwan, and Ukraine, you probably don't want to show that you're weak. Palantir, $12.11, down 4.12%. Look, I would hate to say it, but if it gets down to 7, I would be very happy. I don't know if we're going to get down to 7. Today is a good test if you're a Palantir investor, because we are up 70% in the past 2 weeks. How far low do we go? Do we go to the 9s? Do we go to the 10s? Do we go to the 11s? Do we have resistance at a certain level, or support at a certain level? I think today is one of those days that proves to us how stable the company is, or the stock price is at least, and it'll determine things going forward. Bitcoin down to 26,000. We haven't seen 26,000 in a while. Bitcoin is down. Truist is down. Western Alliance is down. PacWest is up. Some of the banks are down. Some of the banks are up. Zoom is down. NVIDIA has earnings today. NVIDIA is down at $301 right now, down 1.59%. And Sofi is also down at $521. So if you look on the right side of my screen, or left, everything is red. I mean, it's hard to find some green. Walmart, S&P. Look at S&P, 412. Look at that. That was at 420 a couple days ago. Duolingo, Weight Watchers, Microsoft, Google, all of them are red. Microsoft announced a bunch of AI things, by the way. We're going to talk about them a little later, but everything's red. Everything is red. I sold 20% yesterday. I might buy back in immediately, maybe at 12, get some extra shares. For those that sold, that's awesome. I mean, you took profits at the top, and that's great. You did what you had to do. And now it's just a question of timing for when you want to get back in and allocating your portfolio. I'm long, but wondering people's thoughts on when to start accumulating more. I mean, I get that. It really doesn't matter. 9, 10, 11, 12 will look great in years to come, but do you have a price in mind? Yeah, I mean, for me, my average is under 15, so I like anything under 15. I just think there's ways to be logical about this. The stock is up 97% year to date. You probably don't want to buy it when it's up at 97% year to date. You want to just be a little patient. Could it get stupid and go 197% year to date? Yes. Is that more improbable? Yes. So I just wouldn't buy at the top, right? And it's not that hard to recognize when the top is in comparison to how high it's up year to date. That's the only sort of caveat I would put there. But obviously, any of those don't matter that much in the long term. Miyoko, good morning. Thank you for being here. Okay, lots of insider selling. Let me clarify this. Every insider, including Alex Karp, I think he sold like 4 million shares yesterday. This was options vesting. A lot of people don't know this, but on Monday, and yesterday was Tuesday, Monday, so that's when the sales got executed. Every insider basically had a crap ton of options they were getting. Thank you to 300 people here being in the chat. Really appreciate it. Let me explain what options vesting is in like 30 seconds, and then we'll get into the market open. Essentially, executives of companies get options. So they might get Palantir stock awarded to them at $2 a share if in the next 2 years, blah, 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 conditions happen, or these are unconditional, whatever the stock price is, they're going to get them at $2 a share. Palantir's at $12 a share, which means the spread in between has to get taxed. And as a result of paying for that tax, you have to sell a bunch of shares. These are pre-scheduled sales in order to cover the tax. This is exactly what happened to Mark Zuckerberg when Facebook IPO'd. He was only, 24 years old. He didn't have enough money, or 28 years old, to pay the like $1.2 billion he had to pay in taxes, because Uncle Sam is always going to take a cut off of any capital gains. And so he had to sell a bunch of shares and get a bunch of loans and all that stuff to be able to do this. So all the executives right now are selling shares, not because they want to, but because they have to in order for the options vesting. Now, some of them have sold in the past couple of weeks because they want to. Like Shyam Sankar, he sold, I think, about 50,000 shares, which is not a lot, but he did out of pocket. But this particular selling is for options vesting, and it's not out of pocket. All right, 9:30 a.m., May 24, 2023. Thank you for being here. The stock market is open. Wake your ass up. We've got Palantir closing in below 12. All right, closing in below $12. We are going to see where this where Palantir goes. There we go. Palantir at 11.99, still fighting close to 12. So let's see where that goes. Bitcoin 26,000. Tesla's down yesterday. It was at 190. Now it's at 181. It was at 189. So it's coming down below. TFC $30.53. PacWest, Western Alliance, some of the regionals are down. Sofi is down $5.22. Zoom $65. Kathy Wood bought about I think 100,000 more shares of Zoom yesterday. So she did buy the dip on this company that she is long on. She did not buy any Palantir. So by the way, the big 13% run up we saw in Palantir yesterday, breaking through $13. It was not ARK. It had to be another institution because Kathy Wood and ARK bought 0 shares yesterday, even though I thought they were going to buy a bajillion. NVIDIA is struggling to maintain 300. They've got earnings after hours. That's going to be a hell of an event. We've got a lot to talk about to go into their earnings. I was listening to some updates, and if you did 100% year-over-year growth, Palantir can barely crack 18% as what they're guiding. Hopefully we get to like 22% year-over-year growth. If you gave NVIDIA 100% year-over-year growth for the next like 4 or 5 years, they still would not grow into the valuation they currently are. Now, the market is irrational and assumes that NVIDIA is the monopoly when it comes to GPUs, chips, and sort of the AI infrastructure for computing, which is why it's giving it a premium, which I don't disagree with. I just think in an interest rate environment that's this high, you probably want to be a little skeptical about this company. And earnings are going to be very interesting to see if it falls. It's struggling at 300 right now, or if it keeps going. NASDAQ at 12,475. This was 12,700 just a couple days ago. So this one has come down. Disney below 90. We did a deep dive on Disney for about 10, 15 minutes on Finance Junkies, and it's not looking good for Disney. And I can expand on that, but it's not looking good for Disney, especially in terms of their subscriber metrics and growth in comparison to Netflix. Shopify is down. Alibaba is down. Walmart is down. S&P 411 is down. Red. Microsoft is down after a really good day of announcements, but they're down as well. They're integrating ChatGPT into all of Bing services. Google is also down at $121. Opendoor is up, and Amazon is up. And the reason Amazon is the one big tech stock right now that's not affected is because people are starting to recognize their free cash flows are going to go up the wazoo as they decrease CapEx. I was reading about this today, and it's going to be pretty exciting to see what Amazon does over the next couple of months. Thank you, 363 people being here. Let's look at some of the comments. Palantir needs to hold 1150 or it's hitting 10. That is reasonable. We will see if that happens. I personally wouldn't be I wouldn't mind if it hit. Like, again, guys, this is the thing about investing, right? This is the psychology, and this is the thing I've learned over the past couple of years. All of us were like, man, I wish I just bought some more at 10, 11, 8, 9. If we get there, are you actually going to do it? Because I know I will. I've got cash on the side. I know I will, and so it's going to be the same here because we know what the thesis is. And also, Sachin made a good point. When we go back to some of the lows, because the market has been able to break through it, there's more confirmation that it's not a fluke, that you actually have the fundamentals to justify getting higher above that again, which means it's either a bad time to buy or it's an opportunity. And if you've been able to prove that you can beat through some of those prices, then it's an opportunity. VIX calls are up. JP Morgan actually sent a note to their clients to do spreads on the VIX. And I was reading about it yesterday because basically they were saying this is the way you want to kind of hedge yourself against this market. So that's interesting to see kind of how that's playing out. Quarantine Quartet, good morning. I just bought yesterday at 1333 and see it as my new high. I'll buy anything below that. Yeah, and look, don't feel too bad for buying it at the top. There were a lot of people buying yesterday. It could have been at 14 today, right? That's the unpredictable nature of the market, and we tend to beat ourselves up. God knows how many times I've beaten myself up doing that, but it's just about DCAing at the end of the day, and you keep going from there. Remember, there are people like me buying Palantir at $26, right? It's $27. So it's the 13 is still not a horrible buy. We've got Palantir at 1211. So we broke through 11, and we broke through 1190. So instead of being down at 1190, we came back to 12. So that's a nice sign. Tesla at 182. And we've got Sofi down a little bit. Now, Anthony Noto gave a phenomenal interview on Sofi on CNBC. And basically, he was saying their net interest income is doing very well because of how they are getting 6% versus 4% on some of the loans they have on their books. And as a result of that, that's going to be very important. Now, student loan updates. For those that want to know about kind of what's going on with student loan and refinancing, I actually found out today, it's funny, I didn't know this, Sofi is the largest refinancer of student loans in the country. I knew they refinance student loans. I didn't know they were the largest in the entire country. Apparently they are. And as a result of that, when student loans come back, which all likelihood seems that the Supreme Court is not going to give the Democrats and essentially Biden, his executive order of canceling $10,000 of student debt per borrower. That's not going to happen, which means if that doesn't happen and the state of emergency declaration is over, then you've got a very likely scenario where people are going to start having to pay their student loans. And some of those interests might have to be refinanced with Sofi because the interest rates are a little bit too high. As a result of that, that is going to benefit Sofi. That's probably going to bring in around $80 to $90 million of revenue a quarter. And when you think about GAAP profitability in Q4, it's coming. And when GAAP profitability comes, this sucker is not staying at $5 anymore because the market's going to have to respect a company that is GAAP profitable. So it's going to be very interesting to kind of see how that all plays out and see what goes on with Sofi. But I mean, that Noto interview absolutely started killing it. And we were seeing some more from there. All right, we have some breaking news. We have some breaking news, guys. Here we go. I did not see this coming, but here it is. Well, maybe I did see this coming, but it's official. Meta has started its latest round of layoffs. We have new layoffs for the big tech company that has been ruthless on layoffs ever since Brad Gerstner from Altimeter Capital wrote a shareholder letter to Meta about 9 months ago, telling Zucks to cut the freaking jobs, to cut the fat off the pig. Zucks was like, all right, this is what we're going to do. The latest round of layoffs targeted members of Meta's various business groups and follows a previous round in April that affected employees in technical roles. So now these are not the technical engineers. These are the business people. These are the biz dev people, the consultants, the people that are trying to get more ad deals, all of these people that try to make the business succeed. Now, one would argue that these people are fundamentally less important than the engineers and the technical people building the product. But then you have a situation like Palantir where they need as many smart business people as possible because they need to sell the product. So there's a nuance to this. But generally for a tech company, if you're going to be able to generate advertising revenue, maybe you don't need that many business people at the end of the day. About 10,000 workers will lose their jobs in these two recent rounds following the company. Wow, 10,000. That means if they did 4,000, it's going to be about 6,000 people. The layoffs are a part of Meta's so-called year of efficiency, which CEO Mark Zuckerberg pitched as necessary for the company to slim down and become more nimble amid a challenging economy and a weakened digital advertising market. Wow. All right. So we've got Meta coming down. Meta reported first quarter revenue of $27.91 billion. Operating losses of Reality Labs was $4 billion. So I don't know if your guys' your guys' tone has switched on the metaverse. I still think it's not happening. Like, I still think there is no beautiful metaverse. When I say it's not happening, I mean, it's going to happen, but it's not going to be the next iPhone. I genuinely just do not see it. And if I'm wrong on that, I'll eat my words, but I don't personally see it. And as a result of that, it's hard to kind of imagine that it's going to happen. Now, we have WWDC, speaking of the metaverse. Apple, let's go to Apple stock real quick, is going to be releasing a headset. And this is going to be happening on June 1st, I believe, which is their WWDC. The reason why is because there's a very famous tech VR reporter, like a blog that like follows all things VR, virtual reality. And they got invited and they showed the email of them getting invited to Apple's event. Palantir, by the way, at $12 right now, struggling to maintain 12. And so it's happening. It is absolutely happening. We are getting a headset. Apple down on the day, by the way. It was at 173. I think yesterday. And as a result of that, this is going to bring in a question of, is there a new S-curve for Apple? And what I mean by S-curve is not just selling of the product, which by the way, costs $3,000, which I'm not paying for ever. Like, I'm not ever paying. I will never pay $3,000 for a headset. I will use one of my friends, but I'm not paying $3,000. There's no way you're getting me to pay $3,000 for that. It's just not happening. That is going to be, a profitable business for Apple, but the development of the App Store and the third-party revenue, that 30% fee they're going to be able to take off developers creating apps for the VR headset is also going to be a massive S-curve if there's massive adoption. Remember, there is no, massive Apple valuation if the iPhone doesn't have a crazy amount of users, which is about 2-3 billion people, which means, people won't be using apps on the App Store, which means there's no developers. And so I think Apple really has to be able to prove that in order for that to come to fruition. Tesla at 181. Now, Elon Musk gave a phenomenal interview yesterday to the Wall Street Journal. I didn't get to watch all of it, but he was simply talking about a lot of the different things that are going on with Tesla. He said India might be their next target for a gigafactory, especially because they're trying to kind of diversify a little bit more from China, or at least that's kind of the implicit analysis here. Now, they're not getting out of China because China is a huge market, but they definitely want to open up factories in different places. One of the things that's happening today is that on Twitter, presidential candidate Ron DeSantis is announcing his presidential run in Twitter Spaces. For those that don't know Ron DeSantis, He is a Republican. He's the governor of Florida in the United States, and he is going to be going up against Donald Trump, who is the presumptive nominee for the Republican candidacy. And this is going to be really interesting because, number one, it shows that legacy media is losing its butts. I mean, like even a year ago, Ron DeSantis would have gone on CNBC or Fox or NBC or ABC or whatever, or, you know, any of these major networks and announced his candidacy. And those networks would be able to get the beneficiaries of all the attention, because this is a game of attention at the end of the day, that is being driven to their platforms. And you know what you get when you have attention? You have a ton of advertising. And so Twitter, that's been struggling to really maintain its advertising revenues, now has a person who is one of the biggest free speech absolutists. President Ron DeSantis, or Governor Ron DeSantis, maybe president one day, is very big on free speech. And he's the governor of Florida. He was very lax when the pandemic happened in terms of Florida and their lockdowns, whereas other governors in other states like California were much more, one could call it, strict. And as a result of that, the synergies and the symbiotic relationship between announcing your presidency around freedom and liberty on a platform that is trying to brand itself as the freedom platform is very appealing. And it would be really interesting to see what the overarching response is, how many people come onto Twitter and how much attention that gathers for him to announce that candidacy. And that's going to be happening on Twitter, kind of just proving more of a bull case on Twitter as well. Is that why Elon censors tweets for India's government? You know, I mean, credit to Elon, he can't really control this at that level. Either you censor some tweets or the platform completely goes away. So this is where you do basic cost benefit analysis, right? Because he's like, either I censor some tweets, or the government takes away 1 billion people having access to Twitter. Like, you probably you're gonna get rid of some tweets and like weigh the cost against the benefits, but overall, you want to err on the side of what's going on with free speech. By the way, talking about Elon Musk and Ron DeSantis, let's take a little look about some of the other coverage on how the spaces on Twitter is likely going to go.
Sources confirming to NBC News that Florida Governor Ron DeSantis will announce he is running for president during a discussion with Elon Musk on Twitter Spaces this evening. Musk hinted at that announcement at yesterday's Wall Street Journal CEO Council Summit. Joining us now for what this means for the future of the social media platform, Dan Primack is the business editor for Axios. Dan, thanks so much for joining us. You tweeted yesterday that you're not quite sure what this means for DeSantis, but this is a, quote, huge coup for Musk. Why is it bigger for Musk than DeSantis?
Well, because we all knew DeSantis was going to announce he was running for president. We just didn't know, would he do it in a speech? Would he do it with Fox? Would he do it some other way? It's for Musk because the center, and Axios wrote this morning, the center of the conservative media movement is moving from Fox over to Twitter. And ultimately, this should get a lot of engagement. And that's really Musk's main goal here. If he could get an announcement from Joe Biden on Twitter or a one-on-one interview, I'm sure he would take it. What he wants is eyeballs or at least ears in this particular case, since he's doing it via Spaces. So the more people who are on Twitter and paying attention to Twitter, the better it is for Musk.
Yeah, and I want to go back to DeSantis because my initial reaction was almost the opposite of yours. I thought, well, he gets the association with Elon Musk, who has 140 million followers on Twitter, and he gets people caring about this, whether better or for worse, on both sides. Whereas if he had announced on Fox or just in a media scrum in Florida, people might have said, yeah, we expected that. It's not a big deal. So doesn't this help DeSantis in some way, just the exposure, or will it hurt in some way his exposure and association with Elon Musk, David Sachs, and, two rich Silicon Valley guys that aren't exactly part of the base that will have to elect him in a primary?
Yeah, I mean, it obviously remains to be seen how this plays for DeSantis. I think the big risk, well, there's two big risks. One, if this really gets an enormous amount of traffic, we don't know, if Spaces can hold up. We might be talking about millions of people listening simultaneously. I think the bigger issue for DeSantis is he could get overshadowed. Musk is a massive personality who is liable to say who knows what during this conversation. And it's possible that DeSantis could be the B player in his own announcement.
Yeah, it's interesting. All the coverage about this has been about Musk and Twitter as opposed to DeSantis. So you're absolutely right about that. It's interesting, when Musk bought Twitter, the bull case was that this was going to be a technology solution. He was going to create the super app. He was going to use his engineering genius to fix Twitter. And instead, it seems to be a cable channel. He's bringing in Tucker Carlson. He's hired Linda Yaccarino from NBC, who comes from the TV side. Is there a risk that just when Tesla shareholders thought that Elon was going to get out of the public political debate and focus more on Tesla, that this form of Twitter is going to bring him back in?
I think if Tesla shareholders really believed that, they were making an enormous mistake. I think what Tesla shareholders should believe is that Elon is going to be able to get out of a lot of the day-to-day of running Twitter, literally the minutes and hours it was taking him, not the stuff he was doing on the platform publicly, but the stuff he was having to do behind the scenes, really the blocking and tackling and the dealing with advertisers, which is really what Linda Yaccarino is being brought in to do. So that's what Tesla shareholders should take solace in. But Elon Musk is not going to walk away from the political sphere or being part of the public conversation. Arguably, that's why he bought Twitter in the first place. That's the part of Twitter he's always found fun.
Yeah, and Spaces.
Okay, so today on Twitter, I mean, we're going to see what happens because if that Spaces does crash, that is going to say something about the level of traffic that Twitter would be getting. And ultimately, Linda Yaccarino being CEO of Twitter makes it just so much better on Elon and his overall health to be able to run Tesla. Speaking of Tesla, Chinese Tesla rival Xpeng shares dive 5% after it forecasts a plunge in car deliveries. Xpeng's forecast deliveries of its vehicles to be around 21,000 and 22,000 in the second quarter, representing a year-over-year decrease of 36% to 39%. Their revenue in the first quarter plunged 50% year-on-year to $4 billion. That is 50% less than what they got last year at the same time. Xpeng has been hurt by a tough macroeconomic situation in China, as well as rising competition from Tesla, BYD, and electric car startups. A lot of people have been saying that Tesla's sort of competitive landscape in China is not doing as strongly as it could be. And I understand it for BYD because BYD is doing pretty well. But when it comes to some of the other manufacturers, I mean, it's not like they're just outselling Tesla in doves, right? Tesla still is and probably will be one of the most one of the most complex but nuanced cars in the market that anyone can try to buy in comparison to other EVs. And so these are good cars. Xpengs and BYD, these are great cars. I mean, like I've watched a ton of reviews on them. They're not bad cars. They're just not Teslas, and they're definitely not as smart as Teslas at the end of the day. So a little bit of decline there. Now that may signal that the market overall for EVs in China might be decreasing a little bit during this time because of what's going on with the economy on a global level. And China and Tesla might not benefit from that if Xpeng is not benefiting from that, or it just might show that there's an individual problem with Xpeng. And we would find out a little bit more as we get closer to Tesla's earnings in the next couple months. Let's go back to the charts. Let's see what we have in the markets. No, Chris C says, Sir Kukraja, apologies. I'm late joining and I missed the bell. My afternoon now feels incomplete. Could we have another ring, please? Well, Chris, for you and for the 400 that have joined for the past 5 days in a row, I will ring the bell because we just passed 400 people. Thank you, 400 people joining for the morning. It absolutely means the world to me. I appreciate it. Ibot says, when the Trump attacks come, DeSantis needs to appear presidential and take the high road. It is less traveled. It is going to be interesting to see. I personally believe that Trump is going to be the Republican nominee. I think it's going to happen. And if it does happen, it is going to be a really interesting race between Trump and Biden. Can DeSantis get some of the population? Yeah, but I don't know if he has the it factor that Trump has. And if he doesn't have the it factor that Trump has, I think it's going to be more harder. Can we ever get a normal dude in the White House? This is what Elon was saying. And I think Elon thinks DeSantis is a normal dude, right? And so as a result of that, I think that's why he wants to do this together with him. But also he just wants the attention because that attention is important. Well, let's check in on Palantir and what's going on. Palantir at 12.15. All right. Holding up decently. Only down 4%. Not bad. Especially if we think about it. Palantir was 11.93 yesterday and it ran to 13. I was happy when it got from 11.93 to like 12.07 and then eventually it went to 13 and it was crazy. But 12.13 is not bad at all considering where we were just a couple days ago. Sofi at 5.22, Nvidia at 3.01. Now, Nvidia earnings are going to be interesting as we talked about because where is the floor for this stock? People were shorting the stock at $230. People were shorting it at $240. People were shorting it at $270. I don't think anyone in their right mind thought it would go to 300. HSBC Bank put a 350 or 375 price target on this company. So the price target increases started coming up as Nvidia started running, and then you got some like kind of ridiculous numbers. But where is the floor? Because if the bottom falls out on this bad boy, this could be a really ugly decline. I mean, if the bottom falls out on Nvidia, this could crash badly. The problem is, I think there's going to be a lot of buyers in the what do you say, 260s, 270s that would think of it as a very attractive opportunity. And that might end up becoming the floor. But it's going to be interesting to see after hours kind of where that turns out. NASDAQ saying down at 12,004. Let's go to the S&P and see what we have. 411. So we're there at 411. If the S&P were to go down to 400 and we were touching 390, 399, that's where things would get a little interesting, because now the bears have a little bit more of a psychological barrier on their head. 400s, once we crossed that a couple months ago, a lot of people were just, starting to feel more comfortable. If we go back down to the 390s, I think that would reverse course. PayPal still at $61. PayPal is receiving no alpha from the market. You've got to ask yourself, if you're loading up on PayPal right now, what is the ultimate catalyst? People compare this to Meta at $88 and said the valuation was insane. I agree, the valuation is insane, and Meta at 88 was insane, and I was an idiot for not buying it. The problem is Meta had a catalyst, and that catalyst were layoffs. I don't know what the catalyst is for PayPal, to be honest. And remember, Meta went from 88 to 240 because it is a pure play tech company that can lay off, reduce capital expenditures, and then free cash flow goes up the wazoo. I don't know what PayPal is going to do to necessarily have that same type of effect where you reduce one thing, increase the other. The same thing's going to happen with Amazon. They're going to reduce capital expenditures. Their free cash flow is going to go crazy. They're going to get some healthy margin on the e-commerce business that really doesn't exist. I mean, they lose money on North American e-commerce and even international e-commerce. They show 1 to 4% margins on that business. You're talking about an extra couple billion in revenue per year. The market's gonna, value that. And now, as they're introducing AI and their products are becoming even more better in terms of how they're incorporating large language models, Amazon has that opportunity to do that. I don't know if that exists with PayPal, even though I agree that the valuation on PayPal is not the best or is very attractive. I'm not buying PayPal. I don't want to be in the fintech space right now outside of Sofi. Sofi is honestly at a $4 billion market cap. It's the most exciting fintech you could bet on, in my opinion. But PayPal is not the most attractive. Granted, I think it's a good buy. I just don't see what the catalyst is in the next coming months for it to just shoot up. I mean, even the crazy rally we've had over the past couple of days, and PayPal stuck at like $60, right? 61. It's harder for me to see where that rally is going to come from. You got Amazon is up 1.17% on the day. Spotify 146. JP Morgan 135. SLG 2265. The ex-dividend date is May 31st for these guys. Snowflake at 176. Enphase, look at that. Enphase has just been absolutely demolished, stuck in this 160 range. Even through the rally, it could not get back to 170. So the market's very skeptical on their solar growth, and they shouldn't be, but next quarter is definitely not going to be good, just like this first quarter, because of rising interest rates, and that's what the CEO said. The executive chairman did buy 65,000 shares of Enphase, so he has not lost his confidence. But for other Wall Street institutions, I'm assuming they did. DNA, Ginkgo Bioworks, is up 0.33% at 152. Got to give credit to DNA. It has not fallen off. I thought it was going to fall off by now. It is held strong on its momentum. Probably the insider buying has made investors a little bit more confident. But overall, still looking for more earnings growth from DNA before I decide to reestablish a position. Again, I've done the due diligence on DNA. The due diligence is fair. Synthetic biology is real, and there are going to be platforms that enable more companies to be able to build on top of their synthetic biology. This is happening. This is not like, this is something you can't deny. Genetic sequencing at the intersection of AI might be an even bigger technological shift than all the stuff we imagine when it comes to, Palantir's version of AI, Microsoft's version of AI, et cetera. However, it's just more riskier. And because it's more riskier, it's going to take more time, and the market's not going to give the premiums that that company wants during high interest rates. And so there's no rush to necessarily establish a position yet for that company. Let's take a look at some coverage on NVIDIA, since we were talking about that, and get a little bit more of the bull case for why the valuation on NVIDIA is the way it is. Amazon is the only green I've seen. PayPal announced it's going to replace its CEO this year. Wow. PayPal offers everything SoFi does besides stocks and doesn't have Galileo, or however you spell it. Yeah, but PayPal's not a bank. So PayPal does nothing that SoFi does. PayPal's not a bank. SoFi being a bank is the thing people forget. SoFi's a bank. They can give out loans. They have 10 billion in deposits, right? You can do so much when you're a bank. There's a lot of regulations, but you can make money when you're a bank. Look at the market caps of the biggest banks in America. They're all 100 billion plus. SoFi's 4 billion. So you talk about your, what is that? 20x just to get to a $100 billion market cap, which means SoFi is one of the top, I would say 10 banks in the next 10 years, it's not insane, especially given their member growth and how if I'm with SoFi right now, where do you think I'm going to get my mortgage from? It's not going to be Bank of America. It's going to be with fucking SoFi, right? And so people like me, which there's a generation of that are integrating with SoFi, that is to me the bull case. And Galileo is just the cherry on top on this AWS fintech side. There's a lot of bull cases to SoFi. And so they just have to show gap profitability. And when they get there with student loans, I think it's going to be exciting for them.
Talk of the tape, the tech tear, why it's not done. That is the take today from our first guest, Dom Rizzo. He's portfolio manager of the T. Rowe Price Global Technology Fund. It's good to see you. Welcome.
Great to see you, Scott. Thanks for having me.
Yeah, you bet. Great time to have you. Why do you think this run has room to run?
Yeah, well, you know, Scott, if we look out into the back half of the year, we have a couple things going for us. We have improving fundamentals, so revenue acceleration, operating margin expansion, and free cash flow conversion improvement for most of the stocks in the global technology universe. Moreover, when I look at the world, I see relatively reasonable valuations. You know, the global tech index is trading at roughly 22 times earnings today. Historically, that's peaked at 27 to 28 times earnings. And then, of course, we have AI, which is going to drive a lot of demand for all of technology.
Yeah, I mean, I guess arguably that's the more controversial part of your argument is valuation, because it's the place where people get hung up the most. And they say, how can you possibly justify the valuations of some of these stocks, just given the runs that they've had and the kind of environment that we're in, where earnings seem to be projected to, and in a world of higher interest rates as well. So how do you defend that?
Well, you know, it really depends on what we're looking at, Scott, right? Of course, there are some expensive stocks like NVIDIA. We all know NVIDIA is expensive at over 50 times earnings. But when I look at a stock like TSMC, that's only trading at 13 or 14 times earnings today. Samsung is only trading at 1.3 times book. Apple and Microsoft, mid-20s multiples on earnings. I feel pretty good about the valuations in the tech space, broadly speaking.
But even NVIDIA, if you have to quibble with its, valuation, which is obviously high, you still think that stock has more room to run. I mean, do you think it's overvalued at the present time or no?
Well, look, we try to invest over 18 to 24 month time horizons, and we feel really good about NVIDIA over the medium.
All right, that's not an answer. Is it overvalued, my guy, or is it not? By the way, this dude reminds me of somebody. I don't know who he reminds me of, but maybe in the chat, who does this guy remind you of? Because he reminds you of somebody, right? Kind of reminds me of that guy on Narcos, like the main character, the drug lord. For some reason, he kind of reminds me of him, but I don't know who else. Let me know what you think.
Medium to long term. You know, they have incredible GPU technology and it's parallel.
Bro, you can't just say they have incredible GPU technology, therefore we're bullish on it for no, that's not the question. The question is, are they overvalued or not? He's like, they have incredible. Yeah, of course they have incredible if Palantir was $100 today, they have incredible AI technology. They're fucking overvalued if it's $100 today. And he's not answering this question. And a lot of these guys that have some funds in NVIDIA, this is what they do on CNBC. They don't answer the question. They just try to keep, the stock momentum going.
Processing is absolutely mission critical for all artificial intelligence improvements. We're seeing this company with absolute linchpin status in the data center, and there's a complete shortage of GPUs right now. So fundamentals should be very strong.
I mean, it's had a couple of years worth of gains in the early part of this year, though. That's one of the headwinds weighing against it. What kind of test do you think it's going to be tomorrow when it reports earnings after the bell?
Well, definitely. It's always tough when a stock re-rates. I mean, it was only 20 times not too long ago. Now it's over 50. We'll see if the fundamentals are able to outweigh the multiple in the short term. But it's really hard to bet against Jensen and his team.
Yeah, well,
see, I would agree. It's really hard to bet against Jensen and the team. However, at some point, there are companies that are overvalued. It's okay to admit that. Like, I wouldn't bet against Carp, but if the stock is $50 today, after being $7 3 weeks ago, yeah, you bet against the stock. The stock's not, there has to be some levels of reality here. Now, granted, nonetheless, at the end of the day, NVIDIA is one of the best stocks in their sector, and that's why they're getting the premium they deserve. I don't own any NVIDIA. I probably should have bought it at 109. I never understood the thesis. I'm starting to understand the thesis a little bit more. I am starting to understand that GPUs and chips are in shortage, and NVIDIA ultimately supplies those, which is why investors are kind of running to safety in NVIDIA if they can't find any other stocks to run to. And who am I to say that it's crazily overvalued at 300 when, investors are willing to give it that premium? I guess my question is, if they don't keep up this 100% year-over-year growth over the next 5-6 years to grow into that valuation, and, grow into that valuation means at least be reasonable. You don't have to literally, match some DCF statement, but be somewhat reasonable, because right now it's just not reasonable at all. Does the market continue to give it that value? And I don't know. That's what we're going to have to see. That's what we are going to have to see. Let's take a look. Let's take a look at the charts right now and see kind of where things are at and how things have fallen. We got the S&P at 411, DNA 153, Apple 171. Palantir, look at that. 1213, 1214. That's not bad, man. Palantir is holding up strong. Palantir is holding up very, very strong right now. Not bad. Tesla 180, TFC down a little bit. All the banks are coming down. So if you're waiting for a dip, we got one. And let's see if we continue to dip tomorrow. Meta's up because they're doing some layoffs. But we're seeing a lot of other red in the market. If you were waiting for the dip, you got a dip today. Maybe we keep on dipping more. But again, yesterday was not the day to buy because things were going up. Today might be the day to buy as things are going on the way down. Tesla now cracking 179, dropping right below 180. So it's struggling at that level. Sofi at 519. And NVIDIA is still holding strong at 301. And Palantir doing decently at that $12 range, holding up there. All right. Palantir holding 12. Yep. NVIDIA trades 28x sales, 68 forward PE. Yeah. This is why I'm just like, it's a little bit hard to justify it, but ultimately, I guess we'll see what happens. Pelosi bought NVIDIA at 140. Of course she did. Of course she does. It amazes me to see the bull market sentiment so much while the economy clearly has a long way to go. Or am I missing? No, you're not missing anything at all, Mark. We still have to get inflation down more than it is. Now, true inflation today came in at 2%, so we're officially down 3%. But that's true inflation. That's not the actual CPI that the Fed uses. We got to get inflation down, and the Fed has to pause rates. Until that happens, we're still in a dicey scenario when it comes to stocks. Oil has to get down to 60. Shelter has to get better. There's a lot of ways to go. We've got to get a debt ceiling, passed through Congress. So there's some more stuff, which is why the rally the past couple of days has been interesting. But, we'll see how things go as things continue to evolve over the market cycle. But I don't think you're missing anything. It's a crazy bull market sentiment, and that might be creating a little bit of a bubble. We'll get a pullback, and then we'll see where it goes from there. All right, that's it for me, everybody. Thank you, 400 people, for being here on the live stream. I think this is the 5th day in a row. We got 400 every day. It means the world to me. Please like, please subscribe. Twitter's in the description. Have a great day. A couple more videos coming out today about Palantir and Finance Junkies at 9 p.m. Eastern tonight. We will be discussing all things stocks and what's going on in the market. Thank you, everybody, for being here. I appreciate it. Have a great Wednesday, and I will see you later tonight.